Welcome to Kansas City Real Talk, brought to you by KCRAR. I'm your host, Alex Gehring. Guys, I'm really excited about this episode. We're going to be talking about insurance rates and premiums and what we are experiencing, both on the local market, but also on the national level. There is no question that the insurance industry has changed quite a bit recently. And Andrew Williamson and Jennifer Williamson with American Family Insurance are coming on today to talk to us about all of it. This is a do not miss episode, and you're about to learn a lot about the insurance industry. Let's go get Jennifer and Andrew. Welcome back to Kansas City Real Talk, brought to you by KCRAR. I am here with Jennifer and Andrew Williamson with American Family Insurance. You guys, thank you so much for joining us today. I want to start out by giving you guys an opportunity to tell us a little bit about you all, your experience as a husband and wife team, how you guys got started in insurance, your entire life story in less than 5 minutes. Go for it. I want to hear.
I'll start. So I worked for an American Family agent when I was in college. I went to K-State. I worked on an internship program for about 6 months, and then he hired me on to stay until I graduated college. And after I graduated college, he introduced me to a manager in Kansas City, which is my hometown. And I started a scratch agency 26 years ago.
Scratch agency, tell us what that means.
So basically that means I have no policies, I have no clients, I have to build it from the ground up.
From scratch, there we go. Got it.
Yeah, which is really hard to do.
Yeah.
And then me and my husband worked for a communications company doing sales, traveling 3 weeks out of the month. And we were wanting to start a family and didn't want our children raised in daycares. So he quit his job and came to work in the office with me in 2006.
Wow.
So, yeah, we've been working together for 19 years. And actually, when he started working with me in the agency, my mom was our office manager at the time. So he worked with his wife and his mother-in-law.
Oh, yes, my goodness.
Yes. I'm a yes man.
Yep. And about, a year after you started in the agency, our first son was born.
Wow.
In 2007. Yep, November of 2007. And we actually took him to the office with us for about the first year of his life.
That's so funny. I talk often about when my first daughter was born. She's 7 now, but I was in sales, and I brought her with me everywhere, and it was so rewarding and wonderful, and my clients were always so accepting of it and loved her as much as I did. It was so fun. Yeah. It was so fun. So tell us a little bit about what's happening broadly in the insurance market right now. Obviously, we've heard a lot about natural disasters. So like on the national level, we hear a lot about Florida. We hear a lot about California with wildfires. We don't hear a ton about Midwest. People think about tornadoes and all that, and we hear about Oklahoma premiums going up. But can you talk a little bit about what the insurance industry as a whole has been experiencing in the last year or two?
Yes, American Family doesn't do business in Florida, California. If you drew a map of the U.S. and looked at the coastline, we aren't in the coastal areas. We touch a little bit of Georgia. We're in Georgia, so a little bit of coast there, and then Pacific Northwest, Washington and Oregon. But the wildfires that you hear that have all of the media descending on their towns when major wildfires occur are not directly impacted by American Family's dollars. What people don't recognize of most people is the reinsurance companies. American Family buys insurance to protect us from catastrophic hailstorms, tornadoes, windstorms. When we're paying billion-dollar losses, we start dipping into our reinsurance companies. There are few reinsurance companies globally. When California happens, when the wildfires occur, when the hurricanes in Florida happen, flooding in Louisiana, those reinsurance premiums for every insurance company increase. It takes probably a year or two cycle for those premiums to start to increase, but indirectly we all contribute a little bit more in premium when those sort of catastrophic losses occur. from a reinsurance standpoint.
Just in that statement alone, I realized quickly that I know way less about insurance. And I mean, I already figured I didn't know much, but now I feel like I know even less. So when you talk about reinsurance, I want to make sure I understand. Reinsurance is a policy that the carrier holds.
Yes.
Okay. Can you explain that a little bit? You said that American Family also holds reinsurance policies for these smaller carriers around the country.
We buy locally. There's a company called Swiss Re. They're not based in Kansas City, but they have a regional headquarters in Kansas City. It's called Swiss Re. It's from Switzerland, and it's reinsurance. That's one of the largest reinsurance companies. American Family buys a product from them to help protect us from hailstorm that happened in March of last year. My house was affected by a massive hailstorm that rolled through town. Thousands and thousands and thousands of homes, roofs were destroyed, garages. A little tornado in Western Shawnee, small little thing, didn't cause tremendous damage. They dipped into, because those are catastrophic dollars. And you think just that geographic area alone in our neighborhood and the surrounding areas around us, my claim was $44,000. There's 600 homes in my subdivision. Every home in my subdivision needed a new roof. Every home in Western Shawnee, from that 435 to DeSoto, K10 to the Speedway, every home in there was probably damaged. They're going to dip into into the reinsurance premiums.
Well, and part of the problem, too, is that the reinsurance companies are changing their guidelines and making their guidelines more strict for us to get reinsurance. Therefore, we have to change our guidelines to follow.
So that's a nice segue into deductible things, coverage things applicable to roofs.
Well, let's go there in a second. Because it's still, I do think this is a new concept probably for the majority of our listeners. So just to make sure that the blueprint is clear, I, as a homeowner, have an insurance policy through a company. That insurance company has a policy protecting it from large-scale calamity, right? And then if I have a large loss, or my whole neighborhood has a large loss, then the company that I have a policy with is going to file a claim with the reinsurance company that they have a policy with to make sure that they remain solvent. Yes. Is that accurate?
Yes.
And then
but
how
at
many
large scale?
At a large scale, right? So large
catastrophic
losses. Yeah. So entire neighborhoods experience a hailstorm or a large tornadic event, something like that. Then those reinsurance companies are engaged. And how many reinsurance companies are there in the market?
Maybe half a dozen.
Half a dozen. 8. So you've got about 6 companies that could determine what's going to happen for rates for everybody else. We see all of these different insurance companies, but if these companies increase their reinsurance rates, then you all have to increase the rates that you pass on to everybody else to make sure that those products, to make sure you're protected, and also to make sure that the homeowner's protected, because without that reinsurance policy, you guys might not be able to pay
There may not be enough money in the envelope to pay claims.
And the biggest problem we're seeing is, if you think about it, like you'd have a tornado maybe once every 7 years, 7 to 10 years, right? Well, now we're having tornadoes and hailstorms like every year.
Right.
And so the problem is insurance companies, it's hard to predict rate. Like if you have a tornado and then you've got 7 years to collect premiums and invest to make up that difference for a large tornado or a large hailstorm, we don't have that anymore.
So I don't want to get to like some kind of a conspiratorial space. Like that's not me. That said, is it possible that in addition to there being maybe some additional hail, is it also possible that with a surge in door-to-door middleman roofing companies, we've just seen a lot more people encouraged to file hail damage claims at a more frequent clip. Is that accurate or not so much?
I feel that the impact to the frequency of claims occurring because of door-to-door salespeople, in my experience, and I take a lot of phone calls, I do a lot of reviews with clients, that's a very, very small piece of our claim exposure.
Got it.
More often than not, when a hailstorm hit. I mean, March of last year and then 2017, I had another one. When your home is damaged by hail most of the time. Where it starts to pick up, though, is sometimes a neighbor seeing their neighbor getting a new roof. Mm-hmm. There's a roofing company in the front yard. Well, that roofer comes knocking on the door. Well, this one was covered by hail and by their insurance policy. I can get the same done for you. Well, it's not entirely accurate and truthful. But I wouldn't say that that's a big part of the claim checks that we're writing.
Okay.
Most of them are just known catastrophic hailstorm events that but there's also a defining line. There's a point where that hail stopped and the neighborhood next to it didn't get the damage. So
sure.
It's not every home in Kansas City was destroyed by this hailstorm.
Right.
They are regional, but I wouldn't say that the door-to-door folks
have caused
a tremendous impact to that.
I think the impact is that, most people wait for a hailstorm to hit to get the insurance company to replace the roof instead of viewing it as this is my responsibility when the roof has got damage or it's old. They just replace it. Instead, they're waiting for a hailstorm to come, and then the insurance companies are paying that bill.
Yes, I think that's accurate.
And so that's also contributing to the problem is that, people aren't taking responsibility for that, and they're just waiting for that hailstorm to hit.
Sure.
And so now that's why you're seeing changes in policies because in order for insurance companies to stay in business, our clients have to take some part of responsibility in taking care of their home.
All right, so now let's segue into talking about deductibles because from what we're seeing the 2% of the value of the dwelling, right, and anywhere from 1% to 2%. Yeah. I think the lowest premium or the lowest deductible for wind and hail that I've seen is $5,000. Basically, I haven't seen anything lower than that. What's happening there?
So we talked about the reinsurance companies who put stipulations on us as to what you can and can't do moving forward. If you want to buy this policy from us, there needs to be a little more skin in the game from your standpoint. So they're dictating, to some degree, our need to change our deductible options and our limit to replacement cost coverage. In my 20 years of agency and up until the last 6 months, we didn't have to have discussions about percentage-based deductibles. Actual cash value roof coverage endorsements because the age of your roof is X number of years old. Ours was simple, $1,000 deductible minimum, replacement cost coverage unless it's a wood shake roof or a dual layer roof. Mm-hmm. There were some criteria differences, but this is a new discussion that we're having in my reviews with people. 1% is the new normal of your coverage A. 2% isn't as common, but we do have some certain carriers that I'm quoting against are doing 2%. You have a $500,000 house, and I mean the average home in Johnson County is probably that or more. I think you mentioned $700 for new home construction is the average cost of a new home in Johnson County. If you put in a 1% or a 2% wind and hail deductible, that's a $14,000 deductible for a hailstorm.
I've seen some with 3%.
So that's a factor, and it's driven not by our desire
right.
to do that. It's dictated by other factors that are beyond our control.
Well, not too long ago, like less than 10 years ago, you could replace a roof on a pretty sizable house for less than $14,000 for sometimes $8,000 to $10,000, right? If you were working with a company that had its own crews, like you really could get a pretty reasonable deal on a good quality roof. It was just fine. And now, I mean, let's be honest, prices have also gone up to an extraordinary degree. And so if the deductibles were all stuck at $2,500, but the price of roofs were going up, basically they've doubled in the last 6 to 7 years.
In the last 3 or 4, it seems.
That's kind of wild.
Yeah.
The insurance company has, until recently, until these new policies have kind of taken effect, they have been covering 100% of that increase in material and labor cost.
Including the replacing a 22-year-old roof that was damaged because of hail, but had it been a more recent, newer shingle, that hail may not have destroyed that roof in its entirety. We're treating like a maintenance policy.
There you go.
If your house needs painting because the sun has beat down on it for 7 years, no one thinks, well, I'll just wait until it gets really bad and I'll file a claim on my homeowner's insurance. It's wear and tear. No one thinks that their house is going to be painted from their insurance policy.
Sure.
Everybody thinks that their roof should be replaced from their insurance policy, regardless of how old it is or the condition that roof is in.
Well, one of the things that we experience in sales as well is we might, in real estate sales, there might not be any real issue with the roof that is causing anything that anybody would experience in the home, right?
Like, you're not seeing leaks and
we're not seeing any leaks or anything like that. We get under contract. The inspector comes, they walk the home, and they say, no, you got a little bit of hail damage up here. Well, historically, what that has meant is, oh my gosh, we're going to talk to the seller about filing an insurance claim, right? And then they do. 9 times out of 10, it was approved. Buyers getting a new roof to start out their homeownership journey, right? And that is more or less what we are experiencing, even though there wasn't really an issue with the roof itself, but there was an insurability problem for the next buyer.
Right.
So I want to talk a little bit about that piece of things too, because one of the things that we're experiencing are insurability issues after closing, right? So we might find somebody to insure the property based on everything that they know, but there are stories in the marketplace, and I've had people in my office experience this as well, where a month later, maybe 45 days later, the insurance company will send somebody out to take a look at the home to make sure that it is what was disclosed to them, and then the policy changes dramatically. Can you talk to us a little bit about that process, why that's happening, and what you guys are experiencing in that regard?
So when we quote new business, when someone is sent to us and we're quoting their new purchase that they're buying, one of, if not the first question we ask is, how old is the roof on the home that you're buying? Mm-hmm. Well, I don't know. There needs to be some level of knowledge as to the person who's selling that house should have some idea when that roof was replaced. If they weren't the ones who did it, when they bought the house 9 years ago,
we know it's more than 9 years.
There should be some answer other than, I have no idea.
Sure.
Because if you have no idea, then we're going to put it at probably 15 or 20 years old, and then you're going to get ACV. If the roof is 9 years old, you just hurt yourself in that transaction.
And ACV is actual cash value.
Cash value, yeah.
And if the roof is questionable, we'll go out and take a look at it to make sure we think it's insurable before we insure the policy. So we don't have situations like what you're talking about where we insure something and then they go out and say, oh, sorry, this roof isn't insurable, we're going to cancel you.
So you guys will go out before closing and before writing that policy.
I don't want to write a policy
to get
that's going to be canceled in a month. Doesn't do anyone any good.
Doesn't do you any good. Doesn't do the buyer any good. It doesn't help anybody at all.
My referral source does not. It's
of course,
terrible, right?
Of course. The one thing that, of course, is dawning on me while having this conversation, our real estate contract says that insurability has to be determined during the inspection period, which is by default 10 calendar days. And that, it occurs to me, would be very difficult for you guys to be able to get somebody out during that time period to determine the insurability of that roof. So that's probably something that definitely the realtors that are listening, they need to be aware of that potential discrepancy in the contract versus our process. And also, we probably need to be looking at the real estate sales contract that we use to make sure that buyers are better protected there.
Yeah.
Go ahead.
And have a good resource. As a realtor, you should have a reputable, knowledgeable insurance professional that you work with, that if you call and said, look, I've got this roof, I've got this house, it's on the fence about, I don't know if the condition of it, if it's going to go through. Can you go look at the thing before we get too far into the thing? Do you think it's going to be insurable? Do I have an opportunity to negotiate a new roof or new paint or some of the wood rot that needs to be repaired, that sort of thing? And I've done that over the years for countless people. I've probably done it 100 times in my 20 years, where I'll just go look at it. It's local. I'll hop in the truck and go look at it.
Yeah.
And I'm not the one who makes the final determination, but
You can
I've
at
done
least
it
look.
enough to know
We know.
that'll be fine or it's going to need a new roof.
So I don't want to go down a path where we're talking about the pros and cons of specific business models, but it does occur to me that a lot of people are talking to insurance brokers, and I do question, and I'm curious as to your thoughts, do insurance brokers, is it as easy for them to make sure that a roof is insurable as it is for an individual policy writer and carrier?
Yeah, I mean, an insurance broker isn't entirely different than what Jennifer and I are.
Okay.
We're just captive agents. We only sell American Family's product. A broker will sell for Safeco, for Liberty Mutual, for a variety of different carriers. Mm-hmm. Each carrier is going to have different underwriting guidelines pertaining to the roof, pertaining to deductibles. And they'll know what their sweet spot is for the carriers that they want to work with. I would think that an independent broker would have the ability to go look at a home and do their own visual inspection just the same as I would. Having said all of that, American Family, we have direct relationship with our underwriters. We have a pretty streamlined process. A broker, they probably don't have fantastic relationships with their underwriters, and they're just putting data into the system and generating a number and hope that it goes through.
I see.
That would be my only thought on that.
I wanted to go back to when we were talking about ACV, and we were saying actual cash value. How is that determined? So I understand that a lot of our deductibles now are going to be based, they begin, there's a depreciation schedule. When does that kick in, and how does that work most of the time?
I'll try to keep it as simple as possible. The answer is it depends.
Okay.
But for new business opportunities, it's 10 years. In Kansas, the age of the roof needs to be 10 years old or newer to qualify for full replacement cost coverage. If it's in excess of 10 years, there's a schedule that says at year 11 you get this much ACV coverage, this much, and it decreases by 4% each year down to 25%. It stops at 25%. The reality is if you've got a 1% wind and hail deductible and you've got 25% coverage, there's not a whole lot of coverage left for the roof.
Sure, and a lot of people aren't even going to file that claim at that point, right? I mean, they'll probably...
Unless there's, the hail damage dented the siding of my house. It dented my garage doors. It destroyed my deck. It damaged my paint. I mean, when ours hit last year, I got my deck repainted. It destroyed things other than the roof.
Yeah.
That's another important thing to talk about, though.
Go ahead.
Is people should always call their insurance agents before they file a claim to make sure that it is something that's covered and, determine, okay, my deductible is this and I've only got this much coverage. Is it really worth filing a claim?
So I think and there's a little bit of misinformation maybe out there about this piece. I think a lot of people are maybe afraid to call their insurance agent because they believe that when they call their agent, a claim will be filed.
It's the exact opposite.
There we go.
If they call the 1-800 number, that claims representative is only going to file a claim. They will never answer a what if question or how would this. Their only job is to open up a claim and let the adjuster make that determination. My job is to advise.
There we go.
To gather the information, to have an honest, sometimes painful, well, what do I pay for? You made the call. This is the proper thing to do. It's not worth filing that claim, or go ahead, or you're not sure if the roof was damaged enough. I have roofing referrals. I can send them out. They'll take a look at it. They'll give me their report, and then we'll make a decision then. If they say it's worth replacing, let's go ahead and open up a claim.
There we go. So that's an important thing. Call your agent.
If you've got water up to your ankles, just call in the claim.
Yeah, right.
If your house
sometimes
is on
it's
fire,
obvious.
call the claim.
Right, of course.
It's the what-if scenarios that
Yeah.
I want people calling me for.
Well, and too, like sometimes people file claims and then they realize, oh, it's not covered. Well, that still shows up on their claim report as a zero paid out claim.
Sure.
Which still affects them.
It still affects them. And also what we see more often than not is a seller called that out. It was called it in. It ended up being a zero payout. And then they think to themselves, well, I didn't get anything, so I didn't really file a claim. And they don't disclose it. But then the buyer finds out when the clue report is run, and all of a sudden their insurance agent is talking to them about it.
Yep.
So that's a really important thing to talk about. Thank you so much for bringing that up. I want to talk a little bit about what's happening here locally. We've talked a little bit about the macro market. I want to know, because obviously we've seen premiums come up here locally as well, right? I think they're up a lot higher in Oklahoma. I saw a chart recently that showed that Oklahoma was seeing the highest premium hikes. Obviously, Florida and California are, but in the Midwest, Oklahoma was the largest one. But we were not far behind.
Kansas is second or third.
Yes, and I think Missouri was even a hair worse maybe than Kansas, but we were pretty equal, and it was
running neck and
rough.
neck.
Yeah. So obviously we're seeing premiums come up. That said, people are able to find premiums that are a little bit lower with rates that seem almost impossible in comparison to what you might see from other carriers. Can you talk to us a little bit about that and what those market dynamics are? And we've seen it historically too, so maybe some historical reference on that as well.
And that's a tough question to answer because we're captive agents. I don't shop against some of the smaller rural regional carriers.
Sure.
But if it's too good to be true, there's something in that policy. If it's thousands different, there's something in that policy that isn't the same as what the higher value policy is. And you're probably not going to find out until you call in a claim. And then you find out that that's not part of your policy. You looked at $1. How much is my premium? Not what is my coverage? What is my deductible? What is my roof coverage? What am I actually covered for? When you focus on, I need this number to be this so I can get the deal closed. Yep. That's where you run into trouble.
I have a good example of that. I had one where I had done a quote for someone. It was a rental property, but we were like $500 more. But there was differences in coverage, but he didn't care because he wanted to save the $500. Mm-hmm. Well, 6 months later, he's got a pipe that burst, $5,000 in damage and not covered. And it would have been covered on our policy.
Wow.
So he saved $500.
But lost $5,000.
But lost $5,000.
Yeah. Yeah.
So that's just, some of the things that we see where there's little things in policies that are different.
Sure.
So you can save $1, but it might cost you in the long run.
One of the things that I experienced personally that I'd love to hear your comments on, I was with a carrier for a while because I was just getting a killer premium. It was a great premium. And it seemed like great coverage as well. And basically everybody that I sent it to shop said, well, it's a you got to do it.
Yeah,
sorry,
gotta
I
stay
wish I
put.
could beat it, but
Right.
stay put, and you got to do it. But they left the market the next year, which was fine. It's not like I was upset. I didn't have any like extreme loyalty to them or anything like that. But of course, I saw my premium, more than double. So what happened? These companies that enter into the market, throw these low premiums down, and then leave. What are the dynamics there? Like, what is that? Why is that even a profitable thing to do?
I'm not well versed in that. That seems like something that the Kansas Insurance Commissioner should be a little more in tune with, allowing companies, regional carriers to come in, buy the market, not pay claims, and then leave the market.
Yeah.
I don't know how that business model works. I'm not
Here's my
really
question.
able to speak much to that.
This reinsurance that you were talking about.
Yeah.
Are all insurance carriers required to carry reinsurance?
I would think that the financial rating companies that we partner with, American Family is an AM Best rated and has been for decades insurance company that proves to the consumers that we have the funds, we manage our money well, and we'll be there for you if catastrophe happens. Mm-hmm. AM Best has certain requirements that we participate in order to prove our financial stability. Those other carriers may not follow that rule of thumb and maybe don't purchase reinsurance, which when you have Greenland, Kansas, years ago.
Greensburg.
Mm-hmm. There are a lot of regional small carriers in that western part of the state that you've never heard of that went bankrupt, insolvent. Then the state has to come in and pay those claims. That's also part of our premium, is paying money into the Kansas Fair Plan.
Oh, wow.
That exists to pay claims when other companies don't have the means to pay claims when catastrophic damage like that happens.
Well, and I know there's about 25 companies who've pulled out of Kansas.
Oh, yeah.
Or gone bankrupt. Yeah.
Yes.
And it's not even small companies. Like there's a large one in California that is pulling all policies out of the market, like 38,000 policies in California, and they're going to be pulling in all other states too.
And it's a company that everyone listening knows well.
So if we're talking about these small carriers, right, where they suffered, and the homeowners, right, suffered catastrophic losses in a large geographical area, and then these carriers went bankrupt or belly up, however you want to put it. In that kind of a situation, why weren't they able to use the reinsurance, or was it just assumed that they didn't carry the reinsurance?
They may not have bought reinsurance.
There we go.
Yeah.
There we go.
Which
Interesting.
is now where the Kansas Fair Plan has to come in.
And the issue that those clients will have is that if they've got a few claims on their record during the time they were with that carrier, and then that carrier pulled out of the state, now they're shopping for insurance with multiple claims on their record, and they may not qualify for policies with other companies, and then they have to go to the Kansas Fair Plan.
Sure,
which is expensive and not good coverage.
Plus, you've got multiple claims in your record, and you're now dealing with probably companies that do have to include reinsurance, which is going to increase premiums and have stricter deductible policies.
And
right?
you have taken what used to be a huge 10-lane highway of choices to pick from, and now you're down to 2.
Wow.
It's Company A or the Fair Plan because of your claims history.
Is there a way that a buyer or a homeowner can identify if reinsurance is part of their policy?
No.
So the fact that reinsurance, because I know that it's not the same, because I know that one is provided at the federal level and reinsurance is apparently a private policy, right? But it seems a bit like FDIC backing, a bit, right? I know that it's not, but like it's some level of protection that if your company doesn't have enough money to pay out all of the claims, that somebody else is able to step in and finish the job, right, in this on these reinsurance policies. It seems like if reinsurance isn't there, that's something that should be disclosed.
Well, so I think the important thing for clients is just to look at the financial stability rating of the insurance company they're going with. That will tell you whether that company is able to pay claims.
Understood.
And, truthfully, the frequency of which those things happen is not that great. It's becoming more frequent. But if you're choosing a company that you've heard of, that everyone has heard of, any brand that you see advertising is going to have reinsurance coverage.
Yeah.
They're
and a good rating.
They're Fortune 300, 200 companies. They're AM Best rated. They can spread risk all over the country in different ways. It's more the smaller, rural, regional, never heard of. And that's where some of the brokers, if you're shopping rate, a broker has access to those companies that none of us in this room have ever interacted with or heard of.
I think an important thing for clients to do is maybe research like how that insurance company pays claims, right? Because sometimes I think that when you see a lower rate, sometimes it's because they're not necessarily paying out claims.
I see.
As well.
Understood.
So American Family pays claims well.
Right. Okay. Last topic, and then I've got a final question for you guys as well. But I'm curious about your predictions, right? So, do you expect? We've seen premiums go up, and we've seen deductibles go up. Do you think that we're stable now, or do you expect that premiums will continue to rise, or do you expect that they might drop? And let's talk like the next 12 months. Are we reaching a point of stability, or are there more changes coming?
I think within the next year we will stabilize.
Okay.
I don't anticipate major underwriting changes, deductible changes. I mean, American Family choosing to go from a flat deductible to a 1% was a massive change in our sales approach and our relationship with our clients. They don't make changes like that lightly and frequently. So when the powers that be decided to make those changes, they knew the impact that would have. I don't predict massive changes to our underwriting criteria anytime soon. We've had 2 or 3 years of rather impactful rate variations. Mm-hmm. I think assuming Mother Nature leaves us alone for a while and we don't have massive catastrophic hailstorms, then American Family is also a very conservative company in regard to its finances.
Yeah.
If the data says we have to take rate to make up for these losses, we do as little as we can to that rate increase. But if it says we have to, then we usually do. There are some competitors who try to buy up business during that time. But then the problem with that, here's this great rate.
Well, some companies,
a year later,
they're gone.
Yeah.
Well, and some companies, like, the actuaries determine here's what rate you should take, and a lot of companies don't take the rate that they should take. So maybe it says you should take 40% rate increase, and they might take 10, and then they're just in a worse position a year from now.
And so because of the nature of how that part of the industry works, do you expect that some of those that are
they're going to play catch
lower
up.
rates, those are going to catch up.
Those are going to catch up.
So while some of the national carriers maybe have stabilized, people should expect that some of the carriers that you're seeing that are lower right now, we should expect them to increase just based on that.
I think even a few of the national carriers haven't taken the rate that they needed to, and I think they're going to need to play catch up.
Okay.
I think American Family has gotten ahead of the game, and we're going to be in a good position.
Yeah,
I'm not sure everyone will be.
And that can be painful for you guys in the short term.
It is.
But long term
will be
it's
good.
what everybody's going to experience. And there we go.
Yeah, I mean, we've been doing it 25 years. Yes, this is the height for us. We will start to see, and we're starting to see it already in some of our quoting.
Turning.
I mean, our auto rates are stabilized. We're seeing a rate decrease coming on our auto premiums. But our homes, I feel like, again, we took rate earlier than others.
Right.
They're catching up to us.
And we're calling every client, 45, 60 days prior to renewal to schedule a meeting to explain, here's what's happening. Here's your options. If you want to try and lower your rate, you can do this deductible. Here's some things that we can do. And not every insurance company is doing that.
Of course.
And I will say one more thing about the roof thing. And my earlier question was, the answer is it depends.
Mm-hmm.
My policy is a very old American family policy. I don't have the 1% win and hell deductible requirement. Clients who have been with American Family, and I would imagine State Farm and Allstate probably have similar policies that are older policies that they no longer write new business in, that are grandfathered in, if you will, with a different sort of policy deductible option. But any new business that's been rewritten or written in the last 6 years it's more common to see 1%. But if your sellers and your buyers are going, well, I don't have that.
That's why.
You shouldn't be surprised, because 40% of our clients don't have 1% deductibles.
Got it. Okay. That's an important clarification.
Yeah.
Well, guys, this has been so informative. Really appreciate you both. I want to be respectful of your time. Thank you guys so much. I think this is going to be a really beneficial episode for our members and for our listeners. So thank you.
Thank you.
Thank you for having us.
Appreciate you having us.
Absolutely.